I always refer to Bitcoin as a pristine piece of public infrastructure. It's like a road. It's like a collectively owned road, in that as a miner, I've taken on myself to make sure that the road runs and is smooth. I get up every morning and I sweep the road, or I repair a pothole or whatever, and make sure that piece of road is perfectly smooth. That's what Bitcoin is. But it's better than a road, because a road is just stuck in one place.
Hello and welcome to Bitcoin with Jake. This is a podcast all about people's personal journeys to Bitcoin. I wanted to know more about the people converging on this new form of money. Why do they see value in it? What skills enable their understanding? How is it changing their lives? If you're a founder looking for funding or an investor looking to make investments, then please reach out as I develop my network in the space. Do me a favor and chuck us a 5-star rating on whichever app you're using to listen, or a like if you're watching it somewhere. As insignificant as this may seem, they help a startup project like this hugely. Lastly, if you have any questions at all, please just reach out. The easiest place to find me is on Twitter at JakeESWoodhouse. Now, on to today's episode. Today I'm speaking with Simon Collins. Hey, Simon, how are you?
Great, mate. How are you?
Yeah, really good. So we got slightly carried away before clicking record. So let's rewind a little bit.
It's on me.
No, all good. It often happens. We have so much in common, even though we've not spoken before. And that's one of the beautiful things about what Bitcoin seems to do to us all. I always kick off in the same way though, Simon. So can you think back to where you were, what you were doing when you first heard about Bitcoin?
Yeah, I've been thinking about this obviously in anticipation of this conversation. And I kind of think that it's one of those things that I became aware of gradually. And the first time I will have heard of it will have, rushed past me, and kind of in the way that we're all bombarded with advertising all day, every day. It will have kind of slowly and subconsciously kind of started to filter into the old grey matter. But I remember the first time I needed to engage with Bitcoin was to sign up to a private torrent tracker website, and I can't even remember the name of it, but really wanted in on this private torrent site. And so I had to buy Bitcoin. I used local Bitcoins. I remember it being a massive pain in the ass, but it was eventually I got it in this wallet, and I sent it to the site and everything, and I had 0.7 of a Bitcoin left over, and I forgot about it for years and years. And then came back to it and realized, oh my God, my $75 worth of Bitcoin is now worth 300 something. So I whipped that out and probably spent it on booze. Can't remember what exactly, but would have been.
We've all got stupid stories of frittering away on stuff. We go, oh my God, what did I do?
Yeah, that's right. But I also, in between that time, I believe, I also mined on a CPU for a while because I've always been a kind of a hardware tinkerer. I've always kind of, built computers and all that sort of stuff. I love a soldering iron. And so I remember setting up a very early version of maybe CG Miner on a laptop and kind of hashing blocks. I'm not sure how much Bitcoin I actually earned in doing so. It was probably it was either minuscule, or it was an amount I never even want to know about, how much I've left on a hard drive somewhere in an old Acer laptop somewhere in Ara Valley in Wellington. So yeah, for me, it was just kind of this slow, kind of stepwise, kind of come to Jesus sort of process for me. I feel like it's probably been part of my life for more than, for 10 years. It was probably kind of on the longer end of most Bitcoiners' spectrum. But in saying so, I've only been 100% Bitcoin for a few years now, and kind of professionally transitioning from what I was doing before into full-time Bitcoin over the last few years. So yeah, what a long-winded way of saying I actually don't know. It's been...
No, I think it's very common where we all have multiple touch points. And something that intrigues me is that the touch points that each person has are different. And each of those touch points, often they catch our interest because we have a skill in an area that many people don't have. Yeah. So when you talk to someone who has genuinely adopted Bitcoin in a major way, they have this kind of eclectic skill set that really is just what life does. Do you know what I mean? You pick up these skills because you're interested in something, or you've had this experience at one time that meant you had to learn something. And we're all very lucky in some ways to have had that kind of strange collection of different moments that bring us to go, oh, fuck, this is something I really need to pay attention to. And that's what's so cool about it. That's why I love these conversations.
It's a very, very good point, because I think, as we all know, as Bitcoin touches so much of society, it touches so much of finance, it touches so much of computing, computer science, of networks, of the internet, that in all fairness, it's pretty hard to be a professional in almost anything financial or IT based that doesn't have a space or an aspect that would be improved by Bitcoin. Not necessarily Bitcoin where we're at now, but in 10 years, the way that Bitcoin will be integrated into networks and finance and software will be really immense. And so I think it's going to be interesting to see how, as you say, those touch points that everybody kind of has to find and be related to Bitcoin in some way to kind of become a Bitcoiner, will kind of recruit more and more people in new and interesting spaces, and in a way that's kind of potentially more deep than a lot of the ways that Bitcoin touches those spaces at the moment will be.
Lots of knock-on effects, isn't there? I'm very, very interested to hear what your kind of future view is and how we'll get there. But before we get to that point, you have mentioned a few things that we have to kind of dig into first. So I've always been a tinkerer. What does that mean? So we've not chatted before. I know nothing about you in terms of your background, like building computers, soldering irons. For me, this is like, mate, I use a computer, but I could never fucking build one. So teach us a bit about your passion for that area, and how does that help you view Bitcoin from a more technological lens?
Yeah. So I guess probably it's worth mentioning that professionally, I run a Bitcoin mining company, right? That's how I've transitioned into Bitcoin full time. So I have a little company, Stackr, and we're kind of in the seed phase at the moment. And how I have been led to that aspect of Bitcoin, as you've pointed out there, I have always been kind of what I call like a hardware tinkerer, right? So I am not a technician in any way, sense, or form who could set up shop, fix cell phones, repair broken graphics cards, etc. That's probably a little bit above, that probably whooshes over my head a little bit too. But I've always been really big on, okay, well, look, I've got an old motherboard, I've got a CPU that fits. Let's put together a PC and we'll build a Linux box, and we'll run some interesting networking software, whether it's ad block, like a local ad blocker, or a Bitcoin node is a great example. I've always had a Bitcoin node, whether it's on a piece of hardware that's working well and is genuinely and consistently contributing to the network, or whether it's a bit of a janky piece of shit that needs rebooting more often than it's actually up and online. I've always been kind of that, like, what can I do with these spare parts? That interesting piece of kit's on sale. Let's bring that in and see if we can make my network stronger or faster or that kind of stuff. So that's all. That's really it. And self-taught in that regard. So yeah, I've never been kind of content to just buy a computer. I'd much rather build it, have it not turn on the first 10, 20 times, and then finally find the BIOS reset button on the back, get it to boot up, that kind of thing. I love that kind of challenge. So that leads me to where I'm at with Bitcoin mining. I started, as I've mentioned earlier, I started mining on a CPU. That obviously became very expensive on hardware, not really very worthwhile in terms of time and effort of ROI, because of the Bitcoin very quickly transitioned to being only profitable on graphics cards, and after a stretch on graphics cards, only became profitable to mine using an ASIC, which is a specially designed computer to hash just the Bitcoin algorithm. And so I kind of took a break from mining, came back into mining, but mining crypto, mining mostly Ethereum, until that got a little bit too hot and expensive for a family home. And so I had to find a different space to operate. And the reality is, when you're moving to a dedicated space to mine a cryptocurrency, you really need to look at your books and understand, well, where's the ROI in this kind of business? And the reality is, while Ethereum goes through some really big, peaks of profitability, the thing that is consistent in terms of ROI in mining is Bitcoin. And the more you spend time mining Bitcoin and in the Bitcoin ecosystem, the more you realize that the rest of it is kind of problematic. I consider myself a bit of a Bitcoin MIDI. What I like about crypto is that it's a space for experimentation that can be done at other people's risk, right? The whole DeFi stuff, there's a lot of promise in DeFi. I don't want to see it on Bitcoin and Lightning until it's been absolutely and extensively stress tested, so that we can bring the really, really good aspects of decentralized finance, like on-chain swaps, like native stable coins, like two-way pegs, and that kind of thing, to the Bitcoin ecosystem in a way that's really de-risked, because we should be looking at Bitcoin as, the blockchain that kind of rules them all. And so it should be the tried and tested and true iteration of that. That's a bit of a digression from how I got into mining. But yeah, and so Stackr, of course, came out of the situation where a friend of mine said, you really need to kind of scale this up. And I said, well, we need some equity to do that. And so let's go find some equity. So we did a bit of a friends and family round, and we kind of built the Stackr that we have today. And what we're looking for from here is to kind of grow to something that gets further and further behind the meter in terms of how we purchase our electricity, so that we're really getting good value electricity, but we're also purchasing electricity that's the grid to sell to the type of organization or the type of load that we are, because we're a very specific type of Bitcoin mining in general. Is a very specific type of load. It's very flexible and it's very price sensitive. So we don't want to spend a lot of money on electricity. We want to buy it for as cheap as possible. And that means buying electricity that's not demanded by the rest of the grid. For example, like at 5 o'clock when everybody comes home, turns on their oven, plugs in their electric car, turns on all of their lights and heaters or air conditioning. Probably if you're in Australia, it's probably more on the air conditioning side. Here in little old New Zealand, we get quite cold. But overnight, electricity here gets really, really cheap. So that's the electricity that we want to buy. And we want to buy electricity that's right off the generator's site. So, I guess my progression from like kind of hobbyist to semi-professional to professional to now kind of deeply integrated into the way that Bitcoin is going to contribute to not just finance, but also to energy has been kind of like quite a progressive kind of process.
It's a huge area to Bitcoin that people don't necessarily understand at first glance. I just so happened, this is a touch point that I, by luck had. In 2017, I had an energy tech startup in London that was called Green Alerts.
Oh, wow.
Shout out to Ollie Fry, my co-founder at the time, wherever he is. And we were looking at demand side response for residential homes in the UK, which for those that don't understand the energy market, we were trying to find an economic model that meant that homeowners had an incentive to switch the lights off and not use their home dryer or whatever other electricity usage they might have, and get paid not to use it. And if we could basically aggregate these up in one big platform, could we sell that reduction in demand to the grid? And so through that process, I became familiar with what the electricity grid is like and how it actually functions, and the difficulty that renewable energy creates because it's so flexible and you get these big peaks and troughs. And actually the modern energy grid is more and more so demanding flexibility. And then along comes this Bitcoin thing, and you then get deeper and deeper into the weeds, and you're looking at, actually, hang on, this is a demand side response tool. This is insane, maybe. And that's what hopefully you can go on to teach me about. But for those out there that don't necessarily understand the mechanics of Bitcoin mining and would like to learn more, could you give us a simple example of, when you talk about behind the meter, what does that mean? Being close to the generator, what does that mean? Like, just talk us through what perhaps your Bitcoin mining facility at this point actually looks like and how it works.
Yeah, awesome. Let me start with that first piece, right? So we talk about behind the meter. At your house, you are, I guess, in front of the meter, which is that you are metered for the energy that you use, and you buy that energy off a retailer in New Zealand. That retailer is somebody like Meridian, Mercury, Flick, PowerShop, whatever. It's basically the same energy from anywhere, but somebody does all the billing, the metering, and a bit of, kind of maintenance on your property specifically as a power retailer. And for their work there, they get about 30% of the total cost that that person gets billed. So, of course, if you can get on the other side of the meter, you can cut 30% of your bill off. The thing is then, where are you going to buy that energy from? In New Zealand, the structure is we have the retailer and then we have the lines company. And in Christchurch, our lines company is called Orion, and they are responsible for looking after all the local infrastructure, right? So the energy or the transmission infrastructure that gets power from really large substations to the house, and then the retailer takes over again. So Orion makes up about 17% of the cost of electricity, right? So from the big substations to here, for the job of making sure that that all works properly and is not intermittent and doesn't fall over and delivers the required voltage, that's 17% of the total cost that you would pay for a kilowatt of energy at your house. So again, if you can get away from them, you're now 47% cheaper in terms of the electricity that you're purchasing. Mm-hmm. But then you're stuck outside a substation somewhere, right? And those are usually in sort of, not central cities, but they're kind of on the outskirts, but they're often in suburban sort of areas. One of the big ones down here in Christchurch, right next to a retirement village where my grandfather lives by chance. And Bitcoin miners are quite loud. And so you wouldn't really want one at that substation huffing out a whole lot of noise. And you wouldn't want one near the local kind of, cabinet where energy gets split up by Orion to go to all the houses, because again, it's quite loud. And you don't want them at your house because not only is it loud, but it's also expensive. So then we're looking at, okay, we've got to get outside the transmission of this piece. And in New Zealand, we have what's called Transpower. And Transpower take all of the energy in the country and they run the very, very high load transmission, like a big spine that runs up the whole country to transmit energy from where it is generated to where it needs to be for Orion, Wellington Energy, Aurora, etc., to distribute to houses. Now, if you can cut out the transmission, you can save another 10% on the price of your energy, because Transpower takes about 10% of the retail price of energy. So by the time that you cut out your retailer, your lines, and your transmission, you're down to about 44% of the cost of electricity at retail. And so what that leaves us with is actually being right where the energy is generated, whether that's a solar farm, a wind farm, a hydroelectric generator, geothermal, natural gas, coal, etc., although we wouldn't touch those with a barge pole. So what you can do if you're a Bitcoin miner like us, or you're a very, very large wholesale user of energy, or somebody who's very price sensitive to energy and therefore looking for wholesale pricing, is you can take something like a shipping container, you can plonk it next to a hydroelectric generating facility, so a dam or a wind farm, and you can buy energy right off the generator for a fraction of what you would pay if you were at a metered site in Wellington, Auckland, Christchurch, Dunedin, even a small town. Exactly. And so that's what we talk about when we mean behind the meter. So the incentive with Bitcoin mining is to race to the bottom for energy pricing. You really want the cheapest possible energy pricing because that's where your margin comes from. You've got to pay for your kit up front. That's really expensive. So you've got to get a bunch of cash together. You buy a bunch of machines. You really hope they're as efficient as possible, because the energy that you can put into those machines is the margin that you can take out of them, less the cost of that energy. So, there's a bunch of gear out at the moment, which is extremely efficient relative to the previous generations, the S19 XPs, for example. And you can, if you're getting really well priced energy, your margin can be in the 60, 70% range based on the kind of pricing of energy that we're talking about here. So Bitcoin mining is extremely profitable when you get the pricing of the energy right. And that means co-locating your site, your mining facility right next to the generator. So you cut out all of those intermediaries, just like Bitcoin does with the financial system, cut out all of those intermediaries and get right to the source of the generation And that's both good for the generator. The generator sees a direct return on their energy to somebody really close and local, and somebody that they can forge a relationship with, whereby you can create an agreement that enables that demand response relationship to be defined. So, for example, as I've outlined, highest demand for energy in most developed countries will be 5 p.m. through 9, 10 p.m. when everybody comes home from work, turns on the oven, plugs in the car, and that's going to be kind of an increasing aspect of load on the grid. Turns on the TV, lighting, turns on the heat pump or air conditioner. And so being able to kind of switch off at 5 o'clock, let that generator enjoy really, really high pricing from the grid when there's high demand, but then coming back online when the generator is seeing less return than during those high demand periods, and helping them bring their bottom line revenue up so that they have a better business case to continue operation, and B, hopefully a business case to actually grow their operation and continue to deploy more and more renewable energy going forward. So just creating good business cases for generators is the opportunity for Bitcoin.
Wow. And this is something that's so compelling that, as we mentioned already, not obvious to the untrained eye, is that the incentive that Bitcoin mining gives the energy market is like a win-win-win. It's bizarre how kind of perfect it is for all of these players.
Yeah.
But to kind of play devil's advocate for a moment, as an entrepreneur building the business you are now in this very, very nascent market, what is some of the challenges that you've come across? And I can assume, for example, I was involved in some stuff here in Australia, and you're in my Telegram group, Bitcoin Mining Australia. There's plenty of people that have got great ideas, but actually getting these things off the ground is much easier said than done. And dealing with semi-government, private public type organizations that have monopolies on electricity grids, that have no incentive to actually change, they literally get bailed out if there's a problem. What does that mean for these really obviously nimble kind of Bitcoin mines that can be set up or whatever? But has that been a challenge, or how do you kind of go through that?
Oh man, it's massive. We face the same inertia in energy as Bitcoin does in finance, really. From the traditional five, the TradFi or TradN, which is a phrase I'm coining right now, and I'd like a trademark on that. But
you've got one.
It has the same. They have the same kind of aversion to this weird, decentralized, is it naughty kind of emergent player that is just this is just a marginal use of energy. There's this term in energy academics called marginal energy use. And that's what we are, right? Marginal energy use is just the new use of energy that nobody has kind of agreed to sort of allow socially, to give a social license to operate. We've given social license to operate to data centers all over the world for the internet to flourish, right? But at the start, it was a really hard sell. It was like, there are articles, if you dig them up, because they've had to be digitized because they predate the internet, but articles called "Dig More Coal, the PCs are coming." And that was like a Forbes article about how horrific for the environment the internet is going to be, to put a computer in every home and an internet connection and the data centers that are going to run the internet. If every house has one, it's over for planet Earth. And the same kind of criticisms are levied against Bitcoin for its energy use, as we know very well. And so we have a political headwind, right? No politician would be seen, in New Zealand at least, and I know from talking to Australian miners as well, no Australian politician would be seen dead, or at least no mainstream politician would be seen dead endorsing Bitcoin and Bitcoin mining. It would be political suicide to do so. There is pure antipathy in the transmitting entities. So again, like New Zealand, I think Australia has sort of state transmission bodies. We have a national transmission bodies. They wouldn't touch with a barge pole because it is seen as purely excessive energy use. All those kinds of issues, like it's the same stuff we see in finance transposed into energy. The thing is, there is an incredible case study in Texas where there has been some local political support, and love or loathe Ted Cruz. I'm definitely on the loathe side, but we'll give him a pass on this one. He's very into it. The local energy regulator, which is called ERCOT, has been really kind of progressive in the way that they've adopted Bitcoin. They've allowed it to come online, although not at the speed that Bitcoin mining would like to come online. But what they have done is created an environment where it is what they call large flexible load for the grid. And the very beleaguered Texas energy grid, which has suffered decades of underinvestment in its capacity and its growth and its resilience, has seen a business case for investment based on this large flexible load investment in the grid, and has functioned extremely well in these black swan events like super, super hot heat waves during summer, where air conditioners all need to be run at 100% capacity all the time. Bitcoin miners have curtailed their energy use. And in extreme cold weather events, when people have to heat their homes and properties, the same thing. Bitcoin miners have curtailed their use. And there's just data coming out over the last few days, actually, of a kind of debrief of the big storm they had over Christmas, about how Bitcoin miners didn't even need to get the phone call, you guys are going to need to power down. They purely used pricing from the grid as the signal to moderate their use of energy.
Wow.
And they curtailed by 94 point something percent during the storm. And the remaining 6% were kind of anomalous, not properly connected to pricing mechanisms, not necessarily connected to the main grid that required that curtailment. That sort of semi-grid tied. So it wasn't exactly bad actors in that remaining 6% as well. So there is a really interesting emergent case study for how Bitcoin miners are subsidizing the rollout of renewables in Texas, because renewables are far more attractive to Bitcoin miners than variable cost input types of energy generation. And this kind of projected model, this kind of flight of fancy that Bitcoin might be the missing link in how grids can operate efficiently, is bearing out extremely well. And so that's my kind of guiding light at the moment, is to kind of take those lessons from what must be one of the largest energy, single jurisdictions in the world, take those lessons and kind of go, well, look, guys, we can actually apply this here, because not only do we as a country need more renewables, but we actually need more energy overall. And unless you've got a really good business case for how we're going to 5x the amount of energy that we produce, I've got a solution.
Fucking brilliant. It's good to bring something to the table as well. Because I mean, another thing that springs to mind, the electricity consumption predictions for the next 50 years are absolutely mad. When you look at the graph and you see like, this is energy consumption today, this is where I expect it to be by 2050. It's mammoth, the increase. It's almost like a kind of exponential curve. And so that is a problem that we face as a society, regardless if you're into Bitcoin or not.
Yeah.
Where's this electricity going to come?
Absolutely.
And if we can't generate it, then lights aren't going to be switched on. There'll be rolling blackouts. It'll be an absolute shambles. And if you don't have cheap energy, you don't have a functioning economy, and people suffer. They can't turn on the heating in the winter, or, the supply chains break down in some sense. Like who knows what might happen as a result of that. So this is a fascinating subject to kind of get into, and to be able to take another government's piece of work, not a private company, not in a country that's like, who would listen to them, but like, this is the Americans, right? This is Texas, fucking bang, it's been done. Here's how you could do it here. And here's how I can help. And what a brilliant way to kind of kick things off. So Simon, before you comment on that though, I'd like to steer the conversation slightly. We haven't quite done this yet. I mentioned at the start where you mentioned that you were a tinkerer, but I think that probably doesn't do justice necessarily to your professional background. And I'd be keen just to understand what it was that you were doing before you've now got into Bitcoin mining, and how did that teach you about how to look at Bitcoin?
Yeah, so that's a funny one because it's a really hard one to answer. I was a management consultant for the kind of 10 years prior to my transition here. And so I was never in IT. I guess if I'm looking for the link, it's that these two sides of my life kind of ran parallel rather than together. I worked mostly in government and in tourism. And going back even further, I was an academic. And I guess when I reflect on that, I did my PhD in, and now what I say, I did my PhD in bear markets because I actually studied how firms strategized during the global financial crisis.
Okay.
So I tell you what, in terms of managing a technology firm through a bear market, that's been an extremely valuable kind of bundle of knowledge to be able to draw on. But that's just pure luck, right? I haven't kind of been deliberately driven here. I have no idea how to manage good times, so don't even ask me. But yeah, so
good
no,
problem to have when we get
really
there.
ran kind of, yeah, well, exactly. That's right. I'm sure I can make the mistakes when I get there and it will be okay. You can't afford the mistakes during a bear market. That's something that is kind of glaringly obvious, right? So yeah, I ran these kind of two lives in parallel, but not intersecting for a long time. And when COVID hit, and obviously the global tourism market and environment just absolutely stopped overnight, there was not a lot of demand for tourism consultants. And so I was lucky to kind of have this other thing to sidestep into. I cannot say that I don't bring skills as a manager and management consultant through to this. I did run my own company, and I certainly have a background in administration and management and strategy and stuff. But I'm just kind of applying those skills to a very, very different type of business to what I'm used to running. So I guess, and again, when you add, as you say, that I was a tinkerer, hobbyist, manager, Bitcoiner, I guess that's an intersection
No, it is
of
absolutely
all three that we're sort of running now. Yeah.
I did a couple of they call them talent investment programs, but they pay you to go. They put 100 people in a room together for 3 months. Half of them are technical, half of them are commercial, and they say, right, we want a $1 billion company on a business plan, and we'll give you, 150 grand seed funding for 10% of the company at the end of the 3 months. Like in some ways, peak fiat, but equally, like it was an incredible experience to get put through that kind of environment. But I met a lot of consultants through that, and they make excellent startup entrepreneurs because they are, in some ways, professionally trained problem solvers. And it's like, okay, I'm going to this business for a period of time. I've got to figure out how to make it work. I'm going to this business for another period of time, figure out how to make it work. So absolutely, that is kind of stars aligning in some ways, and will definitely be a tool in the kit in terms of building your own business.
It's a very fair point, and I would take that. I would take that endorsement of consultants. Cool. I would have said more that consultants were professional and very skilled at fake it till you make it, which is probably the harsher way of saying the same thing.
That's the inside track. It's like, this is actually how the industry works. We make it look easy, and therefore, you get paid. Management
consultants are they're that classic, they're the duck, right? They're the calm on the top and paddling like hell underwater. When management consultants show up and they look like they know what they're doing from day one, they are full of shit. Don't be fooled.
Okay, I'll remember that for the future. And so you mentioned you did a PhD. So what did you do your PhD in, Simon?
Yeah, so management was my field. I was very fortunate to be at Victoria University under a really great couple of supervisors. And I made the classic mistake, which you're always warned not to do, is to let somebody else pick your topic. But it was an excellent topic, which was resilience. And firm resilience, and I kind of applied a strategy lens. Okay, so if you have a firm and you're facing a downturn, which I studied firms in the face of the global financial crisis, what are the strategies that make you resilient to that downturn, and what are the strategies that are, and I really enjoyed looking at this particular aspect, like necessary but not sufficient, like you've got to do this, but it's still not enough to get you to perform well. And then what are the strategies that are pure detraction from success during those sorts of times? And it's interesting, as a result, technology and the application of technology was a huge driver of resilience in a lot of these firms. Like a lot of them had a core of technology that they applied to what they did day to day, and they just got better or more efficient or more adept at deploying that technology, whether it was in their existing market or whether it was in new markets that they could kind of identify and move into without too much cost or effort. And I think we can learn a lot from that in Bitcoin, because we go through these times where you are going to have, and we're in it at the moment, record low prices for hash, right? Every unit of compute that my computers in town are churning out is being paid the least it ever has been in Bitcoin's history. And that's from 12 to 18 months ago when it was the record high price. So the drop in the value of hash has been precipitous. And that's because not only does Bitcoin's price go down, but the difficulty of the network has been increasing. So you've got a perfect storm of you can't sell your Bitcoin for enough and you can't get enough per hash as a reward in Bitcoin. So we have to be very careful about our efficiency. And that's one of the big projects that we've been running while we're running at kind of a low ebb is, okay, look at each of our different types of machine. And we actually only run S19s, but we run several different models within that series. And if we change the voltage and we change the clock speed on the processors, where's the sweet spot for each type of machine? Because each machine, you'll get a certain amount of hash, a certain amount of compute power per watt that you put in. And watts are our input, they're our cost. Every time you put a watt in, that's a few cents or a red line in your ledger. So you've got to find where you're getting the best return on that investment. And so what we do is we take each machine and we take its voltage on one axis and we take its clock speed on the other axis, and we set them at each of those intersections and we record the efficiency at each one. And it takes 15 minutes for each data point, and there's about 400 data points that are worth measuring per machine. And so we've been running that for months and months and months just to kind of understand where the sweet spot in terms of efficiency of these machines is. Because you can take a machine out of the box, plug it in, and it'll go, and that's great, and it'll do what's advertised. But you can actually eat more out of these machines than is kind of on the box. And that's really important for this sort of time when you are really, really under the pump in terms of your ROI, to make sure that you're getting the most possible out of your kit.
Brilliant example, mate, of something that you knew before that you're reapplying now that's gaining value. You figured out all those years ago in your thesis, which was you have to use technology to get more efficient in a downturn. And that's exactly what you've just described to me. How cool. And it strikes me that what you've developed there could well be productized in some way. Like, is there consultancy opportunities for Bitcoin mining businesses? Because I imagine there's a whole ton of miners out there that aren't having this kind of tuning done on top.
Yeah, that's right. I mean, the problem is once you tell somebody where the sweet spot is for each miner, then they know it and they can go and apply it.
Okay, so that's interesting. So just talk us through that incentive there then. So the incentive for the private business like yourself is to eke out as much margin as you can by being, perhaps my brain's going to Formula One and racing cars. And it's like, if you can work out how to make your car slightly faster than anyone else within the rules, then you do it and you don't tell them. It's kind of the same concept, isn't it?
Yeah. It kind of is. I mean, like, it's interesting. I mean, you may well follow Troy Cross on Twitter. He's a very cool and sort of deep thinker about Bitcoin. And recently he was at one of the mining hubs in the United States, and he was kind of doing a series of tweets about it. And one of the things that he said that's really stuck with me is that Bitcoin mining is not really a competitive industry. It's more like a brotherhood of competitors. And I think that's really fair. I mean, I'm going to be at Bitcoin Alive in another month or so and sharing the stage with another miner, Piers, who you probably know from the community over there. And he's a super nice guy. And we are literally competing for the same block reward. But the reality is it's so distributed. We're not really in direct competition. We're in competition with the meta mining industry. We're not in competition with each other. And that is a really kind of special. And we're in a business accelerator. We're signed up to all sorts of business support entities in this country just because, when a resource is there, you got to grab it with both hands in a startup situation. And everybody, when I show them the pitch deck or our teaser deck, they're like, this is a very different business to what we're used to dealing with. And it absolutely is, because you don't have to sell anybody anything. You just show up, plug in, and you grab your share of a hash, and you are rewarded proportionally. Now, you have to manage the change in your return on hash going forward. Absolutely. That's kind of the thing. But at the end of the day, you don't have to employ a salesperson. You don't have to build a channel. You don't need a marketing department. You just need to kind of maximize your efficiency, your deployment, and your cost of inputs. And so, yeah, it is a really unique kind of business in that way. Does it behoove us to be kind of be withholding about those efficiency numbers? I mean, yes and no. It kind of reflects like work that we've done, and it's kind of like, do you give that away for free? That's something that I'm toying with in the back of my mind. Like, yeah, do you patent something, or do you kind of develop something and assume that if you open source it, your competitors will have such a hard time catching up to where you were 6 months or a year ago that you don't have to worry because you're already 6 months or a year ahead of them. It depends where you kind of position yourself and how confident you are in yourself as a business.
I imagine as well that each Bitcoin mine is unique in some ways. You need cheap energy. That is absolutely key.
Yeah.
But where you get that cheap energy from is unique. So it might be from a hydro dam.
Absolutely,
it might be
right.
from somewhere else. And therefore, how you tune your miners in those different environments will be different.
That's right.
I think perhaps you're right to fall on that kind of, if I tell everyone about it now, I'm already 6 months ahead anyway, and they'll figure out a way to beat me in some other way before then. I think that probably sits right somehow.
To be honest, hopefully in 6 months, you're buying the next generation of equipment anyway. You're into a new realm of efficiency off the shelf, in which case you can start deploying your skills and identifying the new efficiencies of your new tier. So you're absolutely right. Like, there is the opportunity to kind of open source your findings to date for the good of everybody and for part of being a community. And as we sort of outlined at the start, the value of the Bitcoin community is one of its core aspects of and drivers of value, like Bitcoin and Bitcoin Lightning and all of that. Everything that represents the bleeding edge and development edge of Bitcoin today is done off the back of community, right? Almost nobody gets kind of paid to do this stuff unless you've got a startup that sits over top like Strike.
Buying Bitcoin is a capital appreciation play. It's not a cash flow play. So it can be hard to make money in the kind of traditional sense of
exactly. Yeah. So much of it is a pure volunteer basis. It really kind of behooves you and asks of you to make sure that you're doing what's best for the community. Big companies like Riot, Marathon, Hut probably have a different view on that, but they kind of occupy a very different space as businesses, like publicly traded. They have a different set of incentives around how they're measured in terms of return to shareholder. Our success is purely measured on how many Bitcoin can we stick in our back pocket, right? And we don't have any kind of public requirement to do any better than that. But when you have a share price that is buoyed up by your ability to build competitive advantage, that's a different story. So there's probably an echelon of miners who have a different set of incentives to what we do, as kind of in that brotherhood of competitors, as Troy Cross puts it. But yeah, it's interesting and evolving, I guess, is probably a really fair way to put it and consider it.
And Simon, let's chime on that kind of community commentary. So how does it feel to get to the point you're at now? So it sounds like you've run a business of your own before and you've gone, piling into Bitcoin mining. It's very, very clear that you've got a deep understanding.
Gone rogue, yeah.
No, well, some people will think that for sure. But just in the time we spent together on this call.
My wife sure does.
Yeah, well, my wife does too, probably. The ability for people to get passionate about something, to get off their ass and go and learn about it and actually create value continues to blow my mind. And particularly in the Bitcoiner space. So how does it feel? How does it feel right now to be at the cutting edge of a technology that's clearly, in your view, in my view, in many of the people on this show's view, going into an incredible future? How does that feel?
It's exhilarating. Absolutely. I go to work, and by work it means I sort of shuttle between a warehouse that's too loud to hang around and my home office, which is just downstairs. But yeah, it's really exhilarating. It takes a huge amount of conviction, right? Like the drive to second guess yourself in this choice is consistent. It's not for the faint of heart. And I think if I didn't have 10 years of kind of entrepreneurship behind me, it would be a very difficult thing to stay convicted about, because genuinely, for the 24 months or so of Stackr's existence, 70 to 75% of it has been in bear market. And it has been brutal, difficult, and hard to manage. Now, you have to be convicted that that's going to improve and that you can use that time productively to get your ducks in a row to build out for what's coming next. And I do have total conviction that two things. What comes next is Bitcoin enters a new cycle, as it does every 4 years, driven by a halving, which will take it past the previous all-time high to a new all-time high, after which at some point we'll reach a point where we enter another phase like this, and we will have to really carefully manage our balance sheet and our expenditure going forward. But that meanwhile, the opportunity is there to build something, to capture the value that's coming, and to create a really good return for myself, for the people who have kind of come along for the journey with me, for somebody who might come along with us from now on, because we are looking for investors, and that opportunity is there to be taken. And so, yeah, it takes a lot of conviction, a lot of energy, but it's exhilarating.
Yeah, it's awesome. And if I could add to that kind of conviction piece, I feel that the entrepreneurs building in and around the Bitcoin ecosystem have extreme confidence and conviction in their business opportunity because of their conviction in Bitcoin itself. So perhaps you could just talk for a moment around what it was that really caught your attention about Bitcoin and the mechanics of it as a deflationary asset, etc. And the all-time high that you believe is, let's say, 18 months away. What are the economics behind that give you that conviction?
Yeah, I think it's really important to recognize that Bitcoin and its cycle and its pricing and its liquidity and the money that's flowing into it or flowing out of it is couched in a bigger economic system. And I think we were caught short last time when the entire world shit the bed at the end of 2021. And we were caught. We could, if Bitcoin existed in a vacuum, it could have continued on for a little bit longer before the rest of the world kind of dragged us down with it. And again, it's an evolving thing, right? What attracted me to Bitcoin was that, and probably the narrative at the time as well, was that the internet needed its own money, that we were kind of shoehorning an existing way of creating value transfer from the fiat system onto the internet, and that it was a pretty clunky implementation. And this is the sort of 2013, 2014, 2015 kind of narrative, right? Which is that, microtransactions were a new thing. Apple had to invent a workaround to get 99-cent iTunes transactions to work with Visa and MasterCard, because there was no way of creating cheap microtransactions. Credit card transactions were extremely expensive to do, and online was very cumbersome and difficult and wasn't worth doing unless it was several $100, blah, 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 blah. That history is all there to read if you're interested. It was Steve Jobs who invented the microtransaction as we know it, and away we go. So there was a good kind of business case or a narrative around the fact that the internet needed its own money, and this was something that could be easily implemented on the internet and ran over the internet as an infrastructure system, despite having its own kind of backbone. But then as we kind of move through the kind of story of Bitcoin, at least from my perspective, we move into a situation where we had been in a cheap money environment for longer than anybody was used to. Our interest rates were getting really, really low, and that meant that people who had the money to start with could borrow money and throw those into assets and take the accessibility of those assets away from the people who were early stages of trying to build their lives and their own financial freedom. And that massive wealth transfer that occurred in property and in shares, and from the middle class up to the billionaire class, explosion in the value of the billionaire class, and Bitcoin kind of emerged for me there as well. Here's a way of kind of circumventing that total nonsense by entering a system that has a programmed way of managing scarcity. That to me is the most fundamental part of why Bitcoin works, is the programmed scarcity and the predictability of the scarcity of that asset. That it functions as money is great. That it functions as a network, really good. that it kind of represents a store of value, very, very good. But none of that works without the scarcity piece. So that fits over and is fundamental to the delivery of the value and is the kind of magical genius piece that really makes it special. And so it enables anybody. Farmer from Uruguay who gets 5 minutes of internet access a week when they wander into town. Family in Uganda who don't have access to banking services, but they do have a cell phone each. An El Salvadorian migrant worker picking vegetables in the United States who wants to send money back home to El Salvador and is really just stuck with Western Union, to a New Zealander who watches house prices appreciate away from them faster than they can save the deposit for their first house. They're seeing the requirements for that deposit accelerate away from them faster than they could ever expect to save. So it gives all of those people a place and a way to keep their money and move their money that doesn't require the kind of corrupted system that has allowed the transfer of that wealth from one group to another. And then we enter this high inflation period off the back of cheap money. Well, bubbles burst, housing's fucked, equities are buggered, everything's on the way down, inflation's through the roof, and the $10,000 or the $100,000, $200,000 that you save for your house deposit, and you never quite got to buy until the interest rates were the thing that made it impossible for you to buy. Not the requirements for the deposit, but the repayments on the house that you could now afford to buy were going to crush you, so you couldn't get a loan. Again, says to me, well, you just need to opt out, and you need to opt into a system that takes the time preference away from what you need to do with your money, because low interest rates, cheap money says you need to spend your money. There's no point saving it. You got to spend it on either stuff you're going to eat, use, live in, or that's going to appreciate in value over time. You've got to do something with it. Don't keep it. It's useless. If you spend it on stuff, you're getting 7% less than what you were getting this time last year. If you don't spend it on that stuff now, it's going to be worth even less in the future. You've got no options in fiat. You're damned if you do, damned if you don't. Cheap money screws you, expensive money screws you. And for some reason, we never stay moderate, do we? We never sort of sit in the middle nicely at, 4.5% interest rates for 5 years. Nope, we go through these massive explosive blow-up tops of expensive money through to cheap money for, a long time before we explode up again. The narrative around Bitcoin, I think, has changed and changed and changed. But what that says to me is that as a reflection of what's happening in the wider global financial system, Bitcoin offers a myriad of different benefits that the current system doesn't. And that is why I'm convicted to be in this space going forward, because it doesn't seem to matter what the world throws at us as individuals living within a system. Bitcoin kind of offers us an off-ramp to the downside of what that system is imposing on us.
Well said, sir. There's just so many problems in the world that we see that are completely out of our control. What in the hell are we supposed to do about that? And Bitcoin brings something to the table that's a beautiful antidote. So fucking amen to all those comments you just made. How brilliant. And I heard someone recently describe people as ideological Bitcoiners. And I think it's a really lovely phrase in that, 10 years ago, if we were starting companies in the Bitcoin space, I don't think people quite understood as they do now the importance of Bitcoin versus the rest of the cryptocurrency industry. And so let's say you founded Coinbase, it was very natural, having taken VC money, to offer different cryptos. It's become this huge kind of online casino, essentially. And that was just like a natural process that had to take place. But there are now companies that are being started by ideological Bitcoiners, and they specifically want to support this nascent money that is an antidote to the financial system. They do not want to support more of the same shit, basically. And I think that's extremely exciting. And it's almost like there's two tiers of conviction. One is like Bitcoin as a monetary network and a new form of money to help basically everyone live a better life. And the second on top of that is then conviction in your entrepreneurial skills. And the two together are very, very powerful.
Absolutely. Absolutely. And I think you make a really good point about ideological Bitcoin. It's like, Swan Bitcoin, Strike, Daniel Batten at I think C5 Capital, like, let's take what Bitcoin offers, the thing that we know about, whether that's retirement investing in the case of Swan Bitcoin, whether that's international remittances in the case of Strike, or whether that's methane flaring, energy capture in the case of Daniel. And let's apply Bitcoin and the benefits that Bitcoin offers those spaces. And let's not muddy the water with shitcoins, which don't, they don't offer anything except, as you say, kind of gambling and kind of plutocratic venture capital models that can be manipulated under your feet when you're an operator. This is probably one of the things that sent me over the edge from, crypto apologist to Bitcoiner. And again, like I say, I still consider myself a Bitcoin midi. I think there's value in a healthy crypto industry. I just don't want it bundled with Bitcoin. Is that I mined Ethereum, and I mined Ethereum very profitably. And then they changed it to proof of stake. And so all of my investment in hardware was rendered useless over time, and it was extremely profitable right up until that one block where they flipped it from model to model. And don't get me wrong, I never invested more than I got an ROI on. Hardware was all paid for and everything, but it put a hard stop on my ability to kind of scale that business. And that's why the natural kind of transition for me was into Bitcoin.
And Simon, what that tells me as well is this point I love about, sorry to jump in, but until you start to really understand what Bitcoin is, you don't realize that you're building business on quicksand. And when you start to look at what Bitcoin actually is, you go, hang on, is this the best possible tool to build a business on top of that has ever existed? Because of, as you mentioned, the scarcity, this predictability. It hasn't changed since it started. It's not going to change if things, play out as we expect. The chances of it fucking up have become smaller and smaller and smaller over time. And you can start looking at things like the Lindy effect, etc., to really kind of, amp up the fact that it's just so unlikely that this thing's going away. And what we're building today, you're pretty certain that Bitcoin will be around 10 years from now. But a lot of companies on the stock exchange might not be around in 10 years' time. Governments might not be around in 10 years.
That's right. Yeah, that's right.
Currency may not be around in 10 years' time.
Yeah.
How do we predict these? Ethereum might not be around in 10 years' time, as a specific example. So,
or Ethereum and its foundation, might decide to move to another model. They might decide to change the rate of emissions of Ethereum that are paid to stakers in order to bring the price of transactions down instead of allowing it to be a market that sets its own prices, which unfortunately hasn't really worked out for it anyway. It's like, I always refer to Bitcoin as a pristine piece of public infrastructure. It's like a road. It's like a collectively owned road, in that as a miner, I've taken on myself to make sure that the road runs and is smooth. I get up every morning and I sweep the road, or I repair a pothole or whatever, and make sure that piece of road is perfectly smooth. That's what Bitcoin is. But it's better than a road, because a road is just stuck in one place. So someone from Guatemala can't use my road, and someone from, Norway can't use my road. They're too far away. But Bitcoin, you can use my road. You can use my road from anywhere. You can use my road as much or as little as you want to. You can drive over the tiniest little bit of it, or you can drive from end to end. Doesn't matter. It's there for you to use. Have at it. Ethereum is like a road that's owned by somebody, and it's like, yes, you can use our road, but there's quite a few people using our road today. You better really stump up to use the road today. We're actually changing the road to just a single lane. This lane is just for the expensive people who have got a stake in the road, right? They've got a stake in the road, so they actually own this part of the road, and you'll never see this bit of the road. So they're keeping that bit, and so you have to get through that little piece of road if you want to. It's still going to be quite expensive. So that's how I kind of see this. Bitcoin will always be there because there will always be some enthusiast who's keeping their last node online just for the sake of doing it, right? But if there is no financial incentive to keep a staked Ethereum node going, you won't do it. So yeah, that immaculate conception aspect, that it's been created and just given to the world as kind of a gift, is what makes it so important and so pristine as that piece of public infrastructure.
Yeah, brilliant. I love that analogy. Well, Simon, an hour's flown by, so thank you very much for your time. I have two questions just to wrap it up. So the boys from Bitcoin Alive, when I asked for some audience questions, would like to know, out of 10, How excited are you about joining them?
Look, I'm an 11. I'm
Sweet.
super jazzed. We had a great chat with the guys who were on the mining panel yesterday as a kind of a warm up. Hey, what are we going to talk about? Who are you all? Why is this weirdo from New Zealand coming? So that was awesome. And we all just hit it off immediately. I think it's going to be a roaring little panel. So yeah, super excited. Plus, I got a newly minted passport. And as you know, we've been a little fortress kingdom down here for a couple of years, so I'm super excited to get some
Pack your bags
stamps
and
in
go
that
to the
bad boy.
airport. Yeah, hell yeah.
Exactly.
Well, I look forward to meeting
That's
you in person,
right. Yeah,
Simon.
yeah.
And lastly, so if
Yeah,
people
man,
want to
that'd
get
be
in
great.
touch and they want to learn about Stackr, where's the best place to reach out?
I'm on Twitter at Simon O'Collins, and stackr.co.nz is our website, and there's a contact form there. I'm also Simon at stackr.co.nz. We love to hear from people. Yeah, get in touch. We like to talk to miners. We like to talk to people who are just interested into it.
Brilliant. Well, Simon, thank you so much for joining today. Really appreciate it.
Thanks a lot, Jake.
Okay, friends, nice work. You made it all the way to the end of the episode. Thank you so much for taking the time to listen to this conversation. As I said at the start, if you have any questions, then please don't hesitate to reach out. And if you enjoyed the episode, then please rate, like, subscribe, and share. That's it for now. Enjoy the rest of your day. All the best, Jake.